In this video, we will talk about the 11 ways in which billionaires tend to hide their money. Let's begin. Number 11. Sparkling assets. This is a sketchy practice used by some dishonest wealthy individuals to defraud the IRS. This illegal sequence starts with the purchase of high-end jewelry. People purchase diamonds in specific and further pass them down from generation to generation without ever submitting a gift and perhaps even an estate tax return. They're small items that slip through the cracks undetected. Except if the person is audited, there really are no additional details mentioned on the inventory for the IRS to refute. We never recommend violating the law to dodge taxes in this manner. Number 10. Vacation homes. Vacation homes are yet another option for the wealthy to keep their money safe. With the dramatic rise in the standard deduction, many property owners opt out of itemizing common expenses like mortgage interest on their principal residence. If you choose to itemize, your local and state income taxes and property taxes have been restricted to $10,000. Moreover, it is not the same case when you choose to let someone else stay in your vacation home. If you rent your vacation home for less than 14 days per year, the rent is normally tax-free. You could indeed take a deduction if you rent the house for any further than 14 days per year. Number 9. Hiring family members. Another method that the wealthy use to avoid paying taxes is to engage their families. If you own a company, you can take full advantage of this tactic by employing your child or partner and offering to pay them a salary. According to the IRS, hiring members of the family has been one of the benefits of running your own business. So essentially, how does this aid you? What happens is that your company gets a write-off, and your partner or your child can put the funds into other tax-deferred accounts. Such accounts may help keep money out of the hands of tax collectors. One important thing is that you should simply abide by the rules, such as withholding any required payroll taxes. Number 8. Life insurance. Cash value that never expires, like life insurance, whole life, or universal life insurance, would be another place where the wealthy invest their funds. Life insurance is a great way to protect yourself from the tax as well as market risks that come with the other investments or assets. When you withdraw funds from your life insurance policy, you could indeed do so as a tax-free loan against the death benefit. If anything unexpected occurs, there still is a death benefit, as it is a life insurance policy. There still are, however, a few risks associated. For example, suppose you die with a loan against your life insurance policy, which is yet to be paid. In that case, the insurance company will deduct the debt from your death benefit before actually disbursing any leftover funds to your claimants. Additionally, if you loan more than you have paid in premiums for the plan, then that funds could be subject to taxation. Number 7. Playing hide and seek with Uncle Sam. Paying taxes is a chore that nobody ever enjoys. So no matter how much money you make, seeking fresh tax breaks might be a good use. On the other hand, the ultra-rich occasionally take avoiding taxes to a new level. It is estimated that the leading 1% of tax-paying citizens would save more than $5 trillion in tax payments between the years 2020 to 2029. Furthermore, wealthy people's legal tax avoidance strategies are worth examining and employing when possible. However, learning about unethical means is a good idea so that you can eliminate them as well as their potential repercussions. Number 6. Real estate tax deferment. Whenever the affluent sell a real estate investment, such as a vacation home, they might well be able to use yet another tool to reduce their tax bill. So if you sell an investment property, Jim Wang, the creator of Best Wallet Hacks, tries to explain how a 1031 exchange can assist you to defer the expense of taxes on capital gains. He says you can withhold capital gains on selling investment properties if you buy a resembling property. The IRS allows you to defer the payments because you're switching one investment for the other. You'll have to finish a 1031 exchange if you really want to defer your gains as well as avoid paying taxes on them. Then you'll realize those gains. Number 5. Donor-advised funds. People are aware that giving to charity can profit others while also lowering one's taxes. DAF's donor-advised funds is a higher-level charitable donation strategy that can provide even greater tax advantages. Donor-advised funds are similar to super-rich people's personal philanthropic savings accounts. The money you put into a DAF is tax-deductible, but it must go to a charitable organization at some point. For instance, say you made a $10,000 donation to a DAF this year, and upon that get a tax deduction right away. However, you might leave the cash in the account until 2030 and then give it to the charity of your choice. When you put money into a DAF, it no longer belongs to you. It does, however, can grow over time as well as increase your giving capacity even further. Number 4. Offshore accounts. Offshore accounts, including those frequently used in the Cayman Islands, Switzerland, and Singapore, would not be absent from just about any list of several ways the wealthy hide their money. Pedro Nicolassi da Costa, a Business Insider, notes that the ultra-rich have about 10% of global GDP stored away in offshore tax havens. Tax havens, which allow the rich to avoid having to pay their taxes, can adversely affect income disparity in the United States as well as around the world. And this can be proved by the fact that by 2017, income disparity had come back to similar levels to those witnessed during the Great Depression. Offshore accounts are really not illegal in themselves, but they step over the line when they're used to avoid paying taxes. Number 3. Shell companies. You've probably heard of shell corporations, but are they? A shell company is a company that doesn't have any operational processes or substantial assets of its own. Shell companies, even with their shady nature, can sometimes be illegal. For example, whenever an American company wants to install manufacturing facilities in another country, it might set up a shell company. They do, nevertheless, regularly step over the line. An unnamed shell company, for instance, can conceal a company's or person's assets from the IRS, a spouse, law enforcement, creditors, and other third parties. Shell companies and other tax loopholes. As per the nonprofit Americans for Tax Fairness, 8 American companies to avoid paying quite so much as $90 billion in taxes to the IRS each year. Number 2. Municipal bonds. Buying government bonds is a widely known as well as legitimate method for the wealthy to avoid paying taxes. Municipal bonds are issued by governments local, state, as well as federal to fund large-scale projects, like constructing a new school, public park, or highway. Municipal bonds seem to be safe investments with a reasonable interest rate. Moreover, the ultra-rich frequently invest in municipal bonds since income is mostly tax-free. Municipal bonds are also available to lower-income people and people with lower net worths, but for them, it would be wise to look for a taxable bond with a greater return rate. Number 1. Business deductions. Setting up a business, or even multiple businesses, is a popular strategy used by the wealthy to lower their tax burden. However, according to John Doolin, founding member of Money Smart Guides, you don't have to be extremely rich to deploy this technique. This could be a good option if you're already thinking about trying your hand at entrepreneurship or formalizing a side business. Of course, you must first follow the proper procedures. Generally, forming a legal business entity entails a quick trip to your Secretary of State's internet sites and the Internal Revenue Service. Tax deductions are one of the many perks you may be able to take advantage of once you've established your company. To initiate with, you could indeed deduct losses that the company incurs mostly in the beginning and use business expenses to offset the business income to reduce taxable income. So these are the ways by which billionaires hide their money. Comment down what you think about it.